of the year 2022, and you're at the perfect place because this is the year of the tiger, an apex predator, and we've got our own apex predator on the line right now from St. Bart's. How are you?
On the line, it sounds like I'm a Martian or something. I am being victimized.
Well, you are I should let people know, if you think Novak Djokovic has got problems with immigration, Hugh has got, much bigger problems. You may have seen him on social media. He was being held hostage at Charles de Gaulle Airport, and you decided to do a bit of exercise, and the purgatory is still continuing now that you're back in your Caribbean paradise.
Indeed. I think it's the follow through from Brexit and our French cousins. Now, I'm a Francophile, but even my tolerance is where it's just gobbledygook. And anyway, I believed I was all proper and correct. I walked through Charles de Gaulle at 10:30 in the evening, and the civilian guard said, vous êtes the roast beef? Oui, over there, please. Let me see your paper. She said, you need to get tested again. It's like, we got to hose you down. Did I ever tell you I went to a spa in Eugénie de Bain, and it was the weirdest damn place. I love my pain au chocolat, etc. And we go for breakfast. It was beautiful, absolutely. The foothills of the Pyrenees, I believe. And I'm like, bring it on. But they served us a diet. We were on a diet. And so there was like no pain au chocolat and stuff. I was like, okay, come here. What? And so I was like, no. Do you have the gastronomique card for the fat people? We said, like, okay, bring that on. Anyway, that was shortly followed by being in this Tyrolean hut type thing, and with pretty young French girls dressed as nurses and infirmières, and they're like, okay, derobe, sir. I'm like, after you. All that really stupid banter, and like, they're not laughing. They may as well have a cigarette, a gitan, like, take off your gloves, please. And I'm like, really, and stand up against the wall, and with I am not making this up, this is just spontaneous, but it's true, with this fireman's hose, it's like, and so you're pressed against the wall,
hosed you down.
I literally have been hosed down by the French, and the idea is the massage of your intestine. Anyway, I got hosed down in Charles de Gaulle.
Was this a hedge? Was this a hedge fund trip when you got hosed down? Was this in your role as a hedge fund manager, or were you there on pleasure?
Well, it was pleasure, and I take many pleasurable and kind of fun moments. But I have to say, so it was I must go back. I'd love to go back. One of my favorite places, because the family celebrity type chef, celebrity doesn't do justice. Like, one of these renowned old school guys, they keep a hunting lodge down on the Atlantic coast, which was maybe a 2-hour drive. We were in the interior, so driving straight to the Atlantic, and for the price of some, you could get to stay at these lodges, which were on these sand dunes, and they were like Victorian structures, and no guests. You're very, very exclusive, and of course, but one of the times where I show up, the staff ratio is bigger than the guest ratio, and it was just myself. No, it was the family, and I closed the door, and then the manageress, she's like, she thinks I'm Bono. You're back. How long do you keep up with this pretense? I'm like, no. She said, it's okay with me. And it's a magical place, but I have to say, the record is strained by, I was feeling pressure from some stupid NAV event, from stupid being wrong, being wrong in these transitory cycles of time, and it polluted who I was, and it polluted my ability to embrace just the wonderful space and time, especially that my kids were really young, and I just like so.
It's the gift and the curse of being a hedge fund manager. You can go to these places, but you've always got stuff going on in your head. It's the gift and the curse.
Rock and roll, baby. Anyway, what was the question? Oh yeah, it's Paris, and yeah. So anyway, they irritating, and all it reveals is I don't know how to use that story function on Instagram. So anyway, me and Novak. I never liked Novak, but I'm beginning to kind of like him for kind of trying to stick it to the man a bit. So.
Surely he's the kind of guy that might end up in out in St. Bart's. You know, he's in a guy you might see at holidaying in St. Bart's. I'm sure. Surely he's been out there, or you know, those type of guys, Federer, Nadal. That's your kind of world out there, isn't it? You're rubbing shoulders with that type.
Well, remember they're still real professional athletes.
I suppose, yeah, they've not really got time
highest level. So in the future, you know, it's. I do recall, Johnny Halliday, who's the deceased, but the French Elvis Presley, and he had a big footprint on the island, and he's buried in one of the local sand pits, and the anniversary of his death is December, and just about every second or so year, Bono's at the grave, like singing Johnny Halliday songs. You know, it's that kind of place. But sports stars, you got a lot more American and kind of athletes and drivers and golfers and stuff. People that I don't.
There may have been golfers at your own villa, but I know I'm not allowed to discuss names. But there may have been superstar athletes at your place. But once again, Hugh tells me these things. I'm not allowed to talk about them. But anyway, c'est la vie. Now let's talk about one celebrity, Chris Rokos. His hedge fund has just made 1.2 billion. Very impressive. What's your thoughts, Hugh? And do you know him? What's he like as a guy? Have you met him? Have you hung out with him? And what do you make of that? Because that's pretty outstanding performance, isn't it?
Well, you do Chris an injustice in that the hedge fund made. You said 1.2, so the hedge fund made 6 billion. I imagine.
Oh yeah, sorry. Him and his partners have shared 1.2 billion of the profit. Sorry, of course, yes.
Yeah.
Yes.
So they take 20% of it, and the FT ran an article on that, and that when you hear about the compensation of British financial asset managers, it's typically with a 1 year lag. So that would be referring to the year which ended. 2020, the year of the invasion of the body snatchers, and it's a big number. And my first principal thought is congratulations, because to make 6 yards in that remarkably testing environment, and it's not the first. He's not a flash in the pan. The guy's got tenure. The guy has survived the test of time, his original partner with Brevin, with Alan Howard, and then set up about 7 or 8 years ago. And one of my favorite stories was when he set up, there's like the investors can be put into buckets, and like there's a kind of a top tier, and they regard themselves as being top tier, VIP, red carpets and stuff, and they came in saying, we'll support you, but we want to cut a deal, we want to pay less. And Chris is just like, that's what I think about you. And so that's my favorite, and I can't swear that that's true, but that's what I heard. That's my favorite.
And what's he like as a guy? Have you hung out?
I don't know.
You've been in the same room as him, right? You've been around.
If people ever get round to publishing that damn book, I talk about a kind of it's like a Scientology event for the most elite macro hedge fund managers, and I had been going to that since since about 2006, and so Chris certainly was in the room. I was in the same room as Chris. Chris is legend, but never knew him. There was a bit of the kind of the Brevin Howard thing, which was different models. My model was I want to be in your house and having this conversation. They just wanted to make money. So I foretook the upside for the banality of talking to you. But yeah, if I was, but to give you, I guess, what you're maybe looking for, how can you critique it? The one thing which I do disagree with the hedge fund model. I'm amazed it has not been changed. Is the paying out of those management profits immediately with the cessation of the end. This simple, because the Earth has completed its rotation of the sun, then you are awarded whatever that number is. I have always believed that should be like what is the term, like a vested interest. It should be held in an accrual account where you have earned it, but you have to actually be paid out. I've always maintained that somewhere between 3 and 5 years, you have to demonstrate safe passage of those gains for the next 3 to 5 years, and by all means then pay that money out. And
because Chris didn't do that, because on Bloomberg, I mean, the second line of the intro is, Henry's partners paid themselves $1.2 billion just before their investors suffered a record year of losses. So that's exactly a point.
Yeah. So 2020, I believe he made 40%. That's really, really, really good. But I think he lost about 28% last year. But again, if you're looking at articles, they'll be saying that, hey, investors are still chomping at the bit to put more money in. This is, he's pulled back. But remember, he now has, so 40% was really an off the charts great performance. He now has to do that again, just to break even on the people who would have come in on the 1st of January, 2021. Now, Chris and his team are remarkably talented and brave as hell. And so if anyone's going to do that, they will do it. But I just feel that I get no problem with the size of the money. And I salute again, you need balls of steel to do what they're doing in those situations. But I just feel that the money should be paid out immediately. Hey, listen, I had a fund. I launched this kind of China blow up fund. We called it the Eclectica Credit Fund because we were using credit instruments to get a lot of leverage, which is to say, we raised about $100 million. We discussed this previously. And if everything had aligned, if China had just gone boom, we would have made $1 billion for the clients. But I could only, so if I recorded a profit for the clients, I could only pay myself my performance fee if the clients redeemed. So if I made you $1 billion and you actually said, thank you, I'm leaving now, you would then pay me. And actually, because I wasn't trading, I wasn't doing that much. I said, look, normally it's 20%, let's call it 15. Okay, so I charge 15, and it was 15 contingent on the client realizing the gain before I would be paid. And what's more, Chris, I want to say I didn't take a management fee, or if I took a management fee, I took a very, very low management fee that covered my fund costs. So when I say that, I did practice that.
That is your skill seen around the corners.
Well, actually, because we did this, I think was it last week we discussed that, or we were talking about.
We touched on it, yeah, because we touched on it.
Zodiac, the Chinese Zodiac.
Well, you talked about it with Tom, and we can have mentioned it.
Yeah.
And then someone also asked you about, someone in the comments wanted more convexity, which is this kind of exact trade, isn't it? Where you put in a little amount and you make huge amounts more. That's the whole idea of convexity, right?
Yeah. And actually, so let me, what I do here. So actually, I talked, so with that trade back in the day, back in 2011, 2012, and we called it credit because we were buying these instruments called credit default swaps, which basically allowed you to insure so you're a bond investor and you're reaching for yield. We live in a world where the bank pays you nothing. The expression is you're reaching means you're willing to take some commercial risk, that there's a little shade of uncertainty that the company may not make. There's a term, junk bonds. Junk means that they're going to pay you a lot, but buyer beware. You're buying a junk business, okay? And so markets make prices and everything. So they say, well, hey, look, you can buy this. I'm going to pay you a big yield, and if you're smart, you kind of pay away some of that money just to protect yourself in case the thing goes bankrupt. And so there's a price for insuring $1 million of bonds, right? And if you go bankrupt, typically you find that the recovery rate. So, like, say you suffered the misfortune of owning $1 million in a junk bond. The underlying business went bankrupt, or it was determined by an international credit committee to be in default, which is the situation today with this Evergrande Chinese property company with about 20 yards, which is say $20 billion of debt. And they've kind of gone, oops. And so they're in default. They're unable to pay. Typically, and not typically for property, but across the board of the broad swathe of companies, recovery rates for like CDS restructuring events, about 25%, which is to say you've 25% of $1 million is 250. So if you bought it at par, which is $1 million, you've lost the difference, 750,000. But you could buy a CDS, and these CDS, they might cost you like $20,000 or $30,000, if not less. And in the event of that happening, you get paid the 750,000. So like for nothing, for paying just nothing in the event of a catastrophe. Well, it's called insurance. So anyway, I had purchased these CDS spreads. This is a Japanese steel company. I think it's Japan Steel. It's probably merged and changed its name. And so you can see, this is 2008. See this spike here? So this is Wall Street. This is the world banking system, essentially, almost teetering on the brink of default. And these CDS spreads went from like 30 to 200. So you asked about convexity. If you owned this, like almost not overnight, but in the course of 3 to 6 months, you had almost a sevenfold gain. 33 to 200, 33 to 210 is a sevenfold gain. Yeah. My interest appeared in this kind of period here. So that's 2010. So I would have been launching my fund round about here.
And you were hoping for the price to go down, not up.
No, I was owning these things.
Oh, right. Sorry, you wanted the price to go up. Sorry. Okay.
Yeah.
Okay. Sorry. I was like, my mistake.
Because actually what was happening was the morons who buy junk because they're reaching for yield, they're like, you mean actually I can sell the insurance and actually receive a bit more? I'm like, yeah, but if it does go bust, you're not just, you're dead. You're not just dead. You're like, what's worse than dead? I don't know.
Yeah, I would encourage anyone who's listening to this, and if you don't get it, like maybe you can even rewind and hear Hugh say the stuff again, because he has explained to me a few times, and once you get it, it's cool, but it is quite complex. You're even breaking it down, making it very simple. I mean, it is quite a complex thing the first few times to get your head around. It's not, because the upside is so big. It's hard to grasp how much you can make and how serious a position you're in. It's quite difficult, isn't it? There's more to it than just. It's not a simple transaction.
Yeah, I mean we've had this discussion off and on, and part of, I hope, the energy, and I hope part of the motivation for people tuning in is like, you're a bright guy. You are going through. Yeah, that's not someone cutting my grass. As you know, I'm on the work site, and we're installing Windows. I'll try. I hope he's gonna. I can't really ask him to stop. This whole thing about shorting. What is that again? And isn't it evil? Isn't it bad? I think we were discussing during the week that even in the US, they got a Senate committee looking into it. Should it be more tightly regulated? To my mind, that's a feature of this dark time culturally. Again, the alien body invasion is showing the tyranny of the many when they have fear. When people are scared for themselves, scared for their family, it seems there are just no limits to where they're willing to go to abolish the threat, and that's where that feels similar to hedge funds and shorts. And the simple thing is, if you short something, something's trading at 100, and you think it's baloney, you think it's a fraud, it's going to be discovered by the many, it can only go to zero. It can only be declared a fraud and therefore worthless, and therefore its value is zero, which is to say, you would, if you would make $1 million, if you put $1 million in there, you make $1 million minus your trading expenses. If you're wrong, because a lot of people said that about Tesla, and over the last 5 years, Tesla has gone up how many times? 20, 30 times or something, maybe longer time period. You would actually, so you can make $1 million, but in that particular instance, you would stand to lose $20 or $30 million. So actually, it's the pursuit of truth, and it's the bravest thing that you can do. And I think the guys and the girls who are willing to put themselves in harm's way, I don't think that some of them are reckless, some of them are just playing with other people's money, but for the most part, they are curious about the truth. They are passionate advocates. They believe that they have seen something that no one else has, and it's quite right that they should profit from it. And most of the time, we would do better to listen rather than kind of put our fingers in our ears and say, I don't want to hear, which is a little bit of kind of where we are, is kind of where I feel with this silly quarantine that I'm subject to in St. Bart's. But anyway, so the CDS.
Yeah, I mean, they're doing it for a reason. I mean, I think what I would echo is again, because I'm the layman here, what you're saying is that they're doing it for a reason. Hedge fund managers are well paid. They want to make money. And the things they're doing it for a reason. They're not doing it to make a point. So if they were putting the money down, they obviously think it's going to happen. And there's a reason for that. And, sometimes governments would be well advised to maybe ask them, why are you doing that? I mean, you even told me you had people come in at you'd people from the government, the British government, come into your hedge fund and sort of look at what you were doing and ask you why you were doing things, but then not really take notice. You said, because
Well, no, I think it was more the timing. It was so that it would be Bank of England officials, and of course it was after the crisis, not before the crisis. And what you'll find is that before the next crisis, they'll have given up. And they're like, can't be bothered going to speak to those hedge fund guys. They're idiots. And then boom, you get another crash. I brought up another chart, which is not one specific company, but it's the composite, is the cost of credit for all Japanese companies. And so again, it shows you going into the great financial crisis of many, many years ago, of 2008. Again, this is the convexity thing. They traded down here at 30 and went as high as, I have to move it went as high as about 500. So an enormous gain, and then you can see that I was launching my fund round about this period. So you can see those who understand charts and stuff, we had this pullback, we started to bottom, and we were starting to make highs because people, I was buying an unbelievable sum of, I was Mr. Japanese eye tracks for my clients, on behalf of my clients. And it didn't work. Let's stop sharing. It didn't work. Anyway, so that's the convexity. Let's go back to it actually, because you did say China is very much energy. We've returned to the absolute lows of those indices, and again, you can buy catastrophic insurance literally for nothing, because people in their infinite lack of wisdom are selling things that they should be buying. So.
And if I can tease the book again, I know we tease it a fair bit at the moment. I think we're like a broken record, but there's a great couple of chapters where Hugh breaks down the 2008 thing, where the way he constructed that, and it's far too complex to talk about because we'll be here for hours. But that is a beautiful couple of chapters where you really show how you did it and what you did, and it was genius, absolute genius. But anyway, we move on. Hugh, Apple is worth $3 trillion. In your eyes, undervalued? It's a bargain, say you? It's cheap? It should be more?
Well, let's flesh that. You're quite feisty today, Chris.
I'm putting you on the edge. I'm putting you on the edge.
And this follows on. Remember, last week we were kind of trying to play with the elasticity of numbers. What is Apple? Apple is the second biggest selling smartphone device manufacturer in the world, second to Samsung.
Is it? I didn't even know that. I thought you were going to say that. Is it Huawei? I can't remember pronounce that. Is that Huawei? I thought you were going to say them. Samsung.
Huawei,
right? Yeah.
Samsung.
Okay.
And presently, the value of Apple is greater than the combined value of every German listed company. Germany being, I think, the fifth largest economy in the world. Yeah. And Apple, a smartphone manufacturer, has a value which is greater than all of these other entities, the might of the German Republic. So quite remarkable. And I'm going to continue with that thread and say valuation is, in a mad world, it kind of looks good value. Why do I say that, Chris? I say that one of the metrics in trying to determine the worth of a business is to take, how much it would cost them. So it would cost, if you wish to acquire theoretically Apple, the composite of every investor today in the stock market is saying, well, give me $3 trillion and it's yours. Okay. In return, you'd have a business that, after paying taxes, now there's probably a question, the taxes are probably too low, but that's not specific to Apple. After paying wages and all of the dues, the thing that you could retire after research and development, after building new fab facilities for their own semiconductor lines, after building Apple store after Apple store in the most incongruous places across China, etc., you would have $100 billion of cash. You could take $100 billion out of that business without intrinsically harming that business. So 100 divided by 3,000 is what? That's about 3%. In a world where you could put your money on deposit and get nothing. Again, if you're in Germany, put your money on deposit. If you lend to the German government, actually it costs you, like negative yield. So 3% for a business with the surety, with the absolute dominance with the moats, the defensive qualities, and yet the growth opportunities. It's not this is not 1999, and this is not a wildly overvalued stock. Far from it. The real mystery is why it was ever so cheap. And
basically saying it's cheap, people, but he doesn't want to use that word. So but he'll that's what I'm thinking anyway.
I think it could become even more highly rated. I don't like businesses are either lowly rated or highly rated, and then you have to examine the premise behind. You always check your premises. Dagny is a line from Hugh Ashton, who is the philosopher in Atlas Shrugged, which is rebounding around my head. Anyway, let's move on.
One thing I also wanted to ask you about was, I don't know if anyone, well, we're all watching Netflix, right? We've all been in lockdown. We're all sitting at home watching Netflix, Apple, Disney, whatever the hell you're streaming. Netflix is one of the big shows, Money Heist, Spanish TV show. If anyone's not seen it, basically these group of very sophisticated people with, what do you call it? The Dali, Salvador Dali mask, isn't it? The kind of thing. And they break in and they steal all the gold from the National Reserve of Spain, 900 tons of gold. Episode 4, season 5, Pillow Talk. That's when the governor or the governor of the Bank of Spain comes in and he sees like his entire vault is completely empty, and he's like sort of shouting at the commando people and the special forces, saying like, "Don't you understand? Like, we've lost all our money. Our financial system's going to crash here. Our hedge is gone. We don't have any gold left." But Hugh would be saying, not a problem, not an issue. What are you worried about? It's not. If this was 1875, it'd be fine. But in the 2022, Hugh's saying it's fine. Take all the gold. So you're not worried about any banks being having their gold stolen. You think it would make any difference to the world at all?
It would not. So there are 32,000 ounces in a ton, and okay. You said that
900 tons. Well, times 900. In the show, I mean, I don't know if that's accurate in real terms.
And the price today of an ounce of gold is about 80. Let's call it $1,830. Wow. So that would be 5.3 to the power of 10. Powers that I just don't get powers. Let's divide that. So let's divide that by.
Well, apparently in the show they claim they're getting out with about 4.4 billion euros in value.
Oh, well, that's right. So I think that's about. Please check the numbers, folks, and embarrass me on YouTube. But I think that would be about $53 billion worth of gold.
That could be right. Yeah, it could be right.
That sounds about right. And the total value of all gold mined, extracted from the earth, is about the size of Apple. $3 trillion.
3 billion. 3 trillion.
Right. 3 trillion. So back to your point. So I haven't seen that show, but back to the premise. Oh my God, we're the central bank and we've just lost all of our gold. Well, that meant something in the 19th century, when you needed a hard asset. You needed fact and not some narrative to bestow gravitas and respect and security to your institution. And so banks back in the 1800s and before, but so for hundreds of years, lenders used the fact that they had gold bars in their bank vaults, and that was the security that they would lend this paper money out to you when you came knocking on the door. Please, sir, can I have a loan? That went a long time ago. So that was a system. You could say that was a system of integrity. That was a system that kind of made sense, and it's being replaced by some voodoo magic paper system. It's just like it's not even paper. It's digital. It's like boom, to the power of 10, no problem. So that's kind of funny. And actually, those heists. So the creators are like really kind of behind but those kind of heists, and I don't mean anything pejorative about this, but with those numbers and stuff, now those numbers are a bit big, but the modern equivalent, the money heist, and thankfully they're far and few between, but the money heist is really in cryptocurrency, where you buy crypto as an alternative to gold, and it's a digital asset, and you have it in a you have it offline, but in a vault, in a digital vault, and hackers come in, work out the code, enter into the vault, and transfer your money. That's been happening, and it's thankfully far and few, but the instances. But when they happen, it's big numbers. But yeah, officially, Richard Nixon, the U.S. president, closed the gold window in 1971. So, kind of theoretically, up until then, foreign governments that owned US Treasury bills could redeem them to the US government, and the US government would have to pay them. US Treasury bills are US dollars, maybe the US dollars. US government would have to pay them a fixed ratio for their dollars for gold, and the French, my quarantine buddies, of course, with their gnarly country that went, you saved our asses on the beaches of Normandy. You rebuilt our economy after we had no defense against the Hun. And well, you know what? We don't like you anymore, and we don't like these pieces of paper. It's a bit like, because we should be talking about the Eclectica reports. In October 2005, I was quoting the Beatles from the Abbey Road album. You never give me your money, you only give me your funny paper. So this should be with a French accent. Tu ne donnes jamais ton l'argent. Anyway, you never give me your money, you only give me your funny paper. And in the middle of negotiations, you break down. I think Paul McCartney said those words were attributed to George Harrison. But that was what. So that's the late 60s when those words were written, and that really was the dynamic. And forgive me, that is the October 2005 paper. And so that's, again, money heist. Artists, creatives are tuned into the vibe of the time, and so even making this iconic, amazing music. I spent my Christmas watching the 8 hours of Let It Be, inspiring stuff. But you can see, you never give me your money, you give me this funny paper. So you never give me gold. That's what he's saying. You never give me the real stuff. You gave me this shady stuff, these green dollar bills. What use is that to me? And I feel when it all comes down, I want the hard stuff. That's what they're saying. So anyway, culture is a very important thing to watch. It reveals the psychosis it reveals the mood of the many.
But for the record, Hugh is not endorsing you rob your national bank of all its gold, even though it will have no difference on the economy. We're not endorsing bank robberies.
Remember, I did it.
You did it legally.
I did it. Well, hey, listen. What is legal? What is?
Well, you did use guns. You didn't use guns, did you?
Well, no, I did. I'm thinking of today where, if I leave my house, I would be a criminal. If I leave my house in St. Bart's out with the curfew of out with the hours of 10 o'clock and 12 o'clock in the morning, I would be a criminal. So maybe, but yeah, I took a lot of the Bank of England's gold back in 2003. And
again, you can read more about that in the book. But I feel as though I've brought enough hints to the book here. I feel as though I should wind that down. Yeah, exactly. We're almost there, people. We're almost there. We're pushing that truck up the hill. Gradually, we're getting there. It's going to tip over, then we're away. Anyway, right. Okay, so that this month's monthly, we're going to talk about September 2005, Hugh. And I do like that, we are both from Glasgow, we are both from Scotland, and you do include a quote from our former manager of Glasgow Celtic football team when he he's accosted by a TV reporter who says to him, "Gordon, can I have a quick word?" And Hugh, what does Gordon humorously answer?
Velocity. You would think we had rehearsed that.
Yeah.
Gordon Strachan was many things, but
he was also at my wedding, sort of at my wedding. He was in the foyer of the hotel that I got married in when I was there.
I had a major asshole moment with him.
Oh, did you? Very nice. Here we go. Because if anyone doesn't know about football, Gordon Strachan, he's a small guy, red hair. He's quite fiery. Let's say he's not slow in coming forward. So I would imagine it was a bit of a clash of the Titans if you and him went head to head.
No, I was an ass. So I think he did well. I think his record was past the mark. I think some
I think he won the league 3 times. I think he won 3 league titles, and they did well in the Champions League. So I think he's well thought of.
The performances in the Champions League I thought were credible, and as you know, Chris, because we won't mention the B word, but back in the day, on behalf of my clients, I was the second largest investor in Celtic Football Club, and I was in Ralph Lauren. So I had a particularly large client, and they were old school, and they're like, look, we have this annual gig, and you always turn up, and we get it, you're bohemian, you're like Venice Beach, but our clients just think you're a damn tramp. And can you just please buy yourself a nice suit? And so I was in Ralph's room in Bond Street, buying a suit, and Gordon was there, and I was like, oh gosh, I was like, well done, you're doing a good job. And he's like, who the F are you? I'm like, I'm just this, after Dermot, I'm the second largest investor. He was like, really? I'm like, and he walked away. He's like, here in the community, beep, 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 get me out of here. So that was my moment. Anyway, so September 2005, what can we say about that? So again, I keep talking about trades that failed. In this one, I wanted to be, so September 2005, by then I was beginning to fear that America with the housing market was going to take a dive. So I saw that correctly, and I was trying to think of trades. And then I thought gold would be good like that. And so I was looking for other trades that would perform well if the whole world went Alice in Wonderland, and we turned, we shifted the axis of the world. What would fall? Things that were good going down would go up, so to speak. And I had this recommendation of buying Japanese real estate investment trusts, which is basically buying Japanese property companies, and they would pay you out. All of the rental would be paid out to you after expenses.
Is that a REIT, by the way? Is that a REIT? Is that one of these?
That's a REIT. Yeah.
Is that one of these snappy financial things that people talk about that nobody, us laymen, have no clue what the hell you're talking about? A REIT.
Yeah. REIT.
Yes.
Real estate investment trust. And of course, that Japan had this preposterous bubble in land values, and then those land values crashed, and then they really did crash. In America, housing prices got extended famously or infamously in 2006, 7, and then were very much crashing in 2008. But they fell about between 30 and 40%. In Japan, prices came back by 80%. That's a huge amount. And so the Japanese were just profoundly cautious, and still are today. And so the premise was that you could buy these much bedeviled, so you're sitting there, and so this is 2005. So this is 16 years after, after the waterfall decline, and so people are trained by the most recent past, and they lose perspective. So they love it just before it crashes, and they hate it just before it heals. That's kind of the premise of being a contrarian, that you try and use these social forces to your benefit. And so you could see that the last thing. So the Japanese had all of their money. You can measure the amount of cash. Modern society really doesn't have much cash, like physical cash. I have some. I hate. They give you coins. Look, I got these damn stupid things here. Like, they're just. I might as well. I put it in the bin. I never used stuff. Anyway, back then, so if we go back 15 years, the amount of physical cash that was in circulation, the velocity of circulation, back to Gordon's striking, was about 4% of the American economy. Today, I imagine it may be 1%, if not less, because we don't use it. But in Japan, it was something like 16%. I.e., they literally were so terrified of losing more money that they had cash and they'd keep it under the mattress. When you have figures like that, that's what it's telling you. And so, anecdotally, or taking that actually into investment opportunities, I was saying we should be owning Japanese real estate investment trusts, because they gave you a gross dividend yield of 8 or 9%. Right, so that's a lot of money. If you hold that for about 8 years, you're going to double your money in terms of just the return of capital on the dividend. And so I was saying, let's buy these guys, and then let's short Toll Brothers. Toll Brothers was one of the go-go American house builders, and they're called Mac mansions, like McDonald's, a play on McDonald's, and they made gaudy big houses for the nouveau riche. Fair dues to them, but the share price was like that. And so I read this paper again on the flight over from Charles de Gaulle to here, and I thought that was a great trade. Okay, so let's see how great that trade was, Chris. Here is the absolute price chart. No funnies here. This is just the price of all the real estate funds investing in property listed on the Japanese stock market. And the concept was introduced to the Japanese stock market back in 2003. I was writing about these things at the end of 2005. So I was saying you should buy them. So actually, there I was.
You were spot on. You were spot on.
I was spot on.
It went almost vertically up, didn't it? Pretty much. I mean, it was it's a very, very steep incline. But from 1500, where you bought it, to over 2,500 in about a year or so, 2 years.
Yeah. So what's that? That's about 40%. Pretty quick 40% in about a year. And then, of course, in absolute terms, these things just collapsed. That was the Lehman Brothers bankruptcy. Boom, 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 boom. And they've kind of done nothing much. Now, I have to say, but I like all things in Japan, remind me in case I forget, we should talk about Japanese yen. That's a big macro issue presently as we sit here on the 6th of January. That, if I knew nothing about that, if I was a doctor and this was a patient's kind of cardiac rhythm, I would say, this patient should be in the what do they call it? The IEU. This patient should be in the general ward. ICU. This parent's going to make it because I see you, Chris, going up. I see this price going higher. And
You're coming back, baby. You're coming back.
He's coming back. The future's looking, but for confirmation, I needed to trade at new highs. But if we trade higher here, then there. Anyway, I was indicating, however, that my preference was to be long this, and as a hedge fund, I was then trying to be short something else. That is a practice that now I really dislike. These, they're called relative value. Like you've got two different risk positions, one set against the other.
you're trying too hard. Like, if you like Japanese REITs, just buy them, right? If you don't like US house builders, short them. And
this worked for you. But this worked for you, if it went up 40% a year.
No, because
surely that was what you want to happen.
Well, let's share again. And so this actually tells a different story, because if I had gone 1-to-1, so for every $1 million that I was long these Japanese property companies, and I was short Mac Mansions, right? Again, it was a fantastic trade. I was putting it on here, and that's me going up, is me making money. So, my sense was correct. And why am I always that was, I think, my biggest handicap, that someone told me that, like, in America, you get ahead by being long yourself. And our culture, Chris, is one, like, the education system in France sucks. It doesn't like kids. The problem of the education system, especially in Northern Britain, is it instills a sense of mediocrity into children. It says, you're never going to amount to much,
I think we're quite self-deprecating, but sometimes I think people take the self-deprecation a bit far, and if you're a bit bombastic, you're seen as a bit of a douchebag. A douchebag. That's the American word. Shout out to all you in the USA. Shout out.
And a douche is the French word for a shower. But anyway, to get a sense of completion. So, for some reason, I read that letter and I thought, great logic, love it. And then I looked at the chart and I was like, oh God, that was just so bad. But actually, because hedge funds, you're trading rhythms. Yeah, I look with that credit fund, the one that I'd launched in 2011-12, I gave the money back after about 2 years. I was like, if I can't nail this within 2 years, it's a dumbass trade. So actually, here I am, 2005, in 2 years, this thing made 3 times. It was a 3-bagger, went 3 times. Oh, it's orgasmic. So why that's interesting, Chris, is the Japanese yen has started to weaken, and that's unusual. In that the Japanese yen is one of these things that is just always strong, right? And when bad things happen, remember, I told you these Japanese investors are so cautious. They're terrified of losing money. They've lost, they lost everything. House prices, property fell 80%. That's unheard of. If that happened, to put that in context, because again, really to put that in context, so 1999 was the first time that any country's the market value of the real estate of any country had exceeded that of America. Okay, and then Japan just went boom and blew up. Okay, that's just happened again because the real estate in China dwarfs America. So ding dong, ding dong, the bells are chiming. Okay, now real estate, and this is again extraordinary, the value of Chinese real estate, the value of your home, of your apartment, the value of apartments is 4 times the size of the Chinese economy. That's enormous, Chris. I can't use enough wow words. Imagine that Chinese real estate fell 80%, right? So that would be 3.5 years of Chinese GDP. That would be 3. So that's astonishing, especially when you consider that every rational indicator would suggest that there has been a mania and that those prices are absurdly overvalued. Which is interesting, Chris, because again, remember, we had looked at the credit protection swap spreads in Japan, and they're trading at nothing. So that's a kind of disconnect. And if you wanted to give me $100 million, I'd buy $1 billion of those today. And then let's look at, so China, Japan comparisons. I mentioned we have to look at the currency. We have to look at the Japanese currency, because when bad things happen, so that we've mentioned nuclear. We've been advocates of the reemergence of the much despised nuclear sector. We've given the background story before relating to the nuclear catastrophe in 2011, 2012, I want to say, Fukushima. When that happened, the currency went shooting up. Yeah. Japanese currency always goes higher during adversity. It went to 80. And that was like, for me, that was a godsend, because, that was making my junk companies even, these ugly maids even uglier, if you will, which is just the wrong. That sounds like a Prince Andrew expression. It's all wrong. So let me jump out of that and let's see if I can. Oh la vache. Okay, so here is what are we looking at? We're looking at the value of the Japanese yen versus the world currency, the dollar. We're looking at the last 5 years, and the excitement is we've been tentatively, we're just like that. We're just looking over the fence into the future, which is we've been making 5-year dollar highs, because I always lived in this. Again, you turn the earth on its axis, things that are going up, you consider them going down. Yeah. And so when you see this expression going up, that is the dollar gaining in value versus the Japanese, and the inverse would be the Japanese yen strengthening. So actually, we've seen since about a year ago, we have seen the yen weaken from about 102. So again, COVID, a catastrophe, the alien body snatching invasion. What happens? The yen goes, well, in this expression, it goes down, but that means it goes up. It strengthens to close to 100, and now the world, it's not evident when I look at the crazy people that run the world, but financial markets tell me that the world is becoming less nasty, less scary. And so that's 5 years. Let's examine more 10 years. And this is when we start to get some clarity. So you see that really, for the last 5 years, we've been in this trading range. And so there's always excitement when you start to try and challenge, really, for it to be like Twitter is full of people announcing much excitement about this level, but really, you've got to be talking about, these are monthly moving averages. So the monthly average really has to exceed about 119, 120. If it does so, then the dollar could strengthen to 130. And then if that happens, we keep extending these things. We go max. The big play here is we go 130, then we kind of go 155. If we go to 155, baby, we're going to the moon, right? And the only way the yen would trade to those levels. So again, I see the only way. Here, what I'm trying to explore is the kind of the narrative and the conjecture, and this, this is an inanimate object, Chris, right? This is a chart on my screen, and yet I'm having a schizophrenic conversation with it, because I'm like, my medical examiner's certificate tells me that if the momentum persists in this direction, and what I see is I really see a trading low from 1995. So like 10 years before that monthly we were talking about, a long time ago, where you had basically the currency's gone up, gone down, gone up, gone down, gone up, gone down. It's done nothing. It's effectively created a bottom with a duration of 25 years. All right. And so that may continue for the next 25 years. But if it changes, and like I say, if we were to breach 120, 125, 130, 135, the power would be so enormous that I would be prophesizing a profound yen weakness. Now that's interesting, because the environment where that would happen would be this whole notion of Chinese property being 4 times GDP and Chinese property falling. The Japanese standard was 80. Let's say it falls 40%. 40% would be 1.5 times annual GDP. That'd be cataclysmic, and those CDSs would be trading at insane levels. And I think there would be such bedlam and monetary chaos in Japan owing to problems. Well, there'd be chaos everywhere. And that chaos would reveal itself paradoxically in profound weakness in the Japanese yen. I can't prove that, but that's the narrative in my head when I look at those charts. And then finally, forgive me, this has been long, but I hope we've covered some bases. But the other big issue, the two big issues, we'll gloss over one being the big issue that should be in the front page of financial newspapers, and it's not: Kazakhstan.
Meltdown, absolute meltdown there. It's the government's resigned, the troops are out in the street, and it's not looking good. I think Russian troops are arriving to keep the peace.
There will be peace. The fascists are coming. And why the people rebelling?
Oil prices have shot up to an unacceptable level that they cannot maintain their standard of living, basically, so they've rebelled.
And the paradox is that
they are the biggest producer of uranium, and that's essentially going to be our future fuel. So we're sort of looking at the future, possibly, is what you're saying, I think.
So they are the Saudi Arabia of uranium, in terms of they are the world's larder. They own the largest deposits of uranium in the world.
I reckon they produce over 40% of the world's current uranium.
Well, they may do. That would make sense. Effectively, this is like profound social upheaval, the resignation of the royal family in Saudi Arabia as the country goes up in revolt, right? And again, the paradox: an energy-rich country where the citizens have got to burn wood to keep warm, and they're like, up yours, give it to the man. Yeah. This is the dawn of chaos, and it's not being reported.
They just don't care. Yeah. Have you been to Kazakhstan? Is that one of the places? There's not many places you've not touched on, but have your feet walked on the land of Kazakhstan?
That's kind of more the kind of place that I would send my ex and incredibly talented investment partner, George Lee, Mr. Lee. Mr. Lee. Do you know what?
But when you use the word investment partner, then you say you would send him. That sort of means that he wasn't technically a partner because you were sending him. No,
I was a senior partner, and he was the intel, and I was the shaman. I'm ashamed to say that I would be sitting in a dark room playing punk rock, and one time we invested in a Finnish company that slaughtered reindeer. I bought everything, and he called me up, and he's got Wellington boots, and he's walking through reindeer blood. I mean, that's a life eclectic, people.
So he went to Kazakhstan. You didn't go. Fair enough.
Yeah, and it's not. So anyway, the uranium is an interesting story. Again, I do not understand how the press is working today in terms of what is accredited to be news stories, and what is not. It's a big deal, and it further enhances the attractions of the uranium sector. So yeah, it should be dominating headlines. Putain, it's not a French swear word. Is the president of a fascist country, Russia. We'll go in and suppress things, but that should be coming to your uranium portfolio shortly in the guise of higher prices. The alternative argument would be that chaos, perhaps they would just flood the uranium market, and that actually you would lose the discipline for pricing. We shall see. The other big issue, which was related to that yen chart, really is the continued sell-off in government bonds, US Treasuries. I'm looking at the last year in terms of the US 10-year yield. So when the yield goes low, the price goes high, and the inverse. And you can see that ever since about August of last, well, what I want to say longer. So let's do 2 years, because we've got to look at the COVID period. So government bond prices went zooming up and yields went almost to zero in the midst of the chaos and the fear of the pandemic. And then the emergence of vaccines has restored confidence and taken us from the cliff edge. And so bond prices have come back from their highs. And that all seemed kind of natural. And then the strange one was that starting from about a year ago, government bond prices started to strengthen again. And we got almost back to 1% bond yields. And then again, the market's changed its mind again. So, hold on a second, because you can't open a newspaper without seeing inflation. Our friends in Kazakhstan, it's the inflation of energy prices. In the UK, it's energy prices everywhere. I think the price of natural gas, if you change it from thermal units to barrels of oil, I think Europe in some instances is paying as much as $400 per barrel of oil, gas equivalent, right? People are going crazy. And of
that's
course,
a big deal. Everyone's talking about it. Yeah, everyone's talking about it.
Inflation is when you're robbed your power to buy other things. Yeah. So it's a big deal. And so we're seeing high inflation prints, the highest in 25 years. And that's why, and you see, I put this line, a barrier. So this is a bit like the 5-year, the yen we were looking at. If we're looking over the top to see what comes next. Also, what's interesting about this chart is how mean markets are. So like you had this trend and it was broken. And so at this point, you're thinking bond yields are going back to like the lows, but it's a head fake. And boom, you're back saying, oh my, like if I was long US Treasury bonds, I'd be worried just now. But I worried too much. So again, like the yen, we zoom, we want to keep stepping back. So we're looking at 3 years, 5 years. Again, you see the importance. It's a bit like the yen chart. If we break that level, then we go to. If we break that level, we're going to 250. If we break this level, we're basically going to about here. Why is that significant? Because this line here is the long-term downtrend. Like, so there we go. That is since 1980. And that is the greatest bull market ever in US Treasuries, indeed in any asset class. This is it. US Treasury bond yields went from 17%, maybe too high, 17% to 40 basis points, the greatest ever. This is the low point created by the COVID disaster and the bounce back. I have no idea, Chris. Actually, it's so far it's a storm in a teacup. My old sparring partner, Chris Benodi, Chris Rockos, they believe that this is a change in time, that this monumental bull market has run its course and is now going to be subject to change, which is to say that this bond yield is going to go a lot higher. I would say that is idle tit-tat from people who should know better. But in the case of Rockos, he's allowed that owing to his genius at short-term trading. And just if it occupies that space, Rockos will make, if I sound like the marketing department now for Chris, but I'm sure he'll make a lot of money. But there's nothing in that chart to tell us that we're going to break that line. And one of the things that suggests we're not going to break that line is Chinese GDP being Chinese property being valued at 4 times GDP.
Yeah.
Yeah. And we spoke about
how the Japanese got very, very risk averse after the collapse in their property market. So, and it shows you the redundancy in bureaucratic power, that when you impose a bear market, when things shift and change against you, people become fearful. So in China, these great, powerful bureaucrats have said to the banks, you must lend, pump money into the system. We can't have Kazakhstan. We can't have revolt in the system. And this is a quote from the Financial Times. It's my scrapbook. So Sun Yu in Beijing is saying, hey, Chinese banks. So here we are, the 6th day of the year. And banks have a quota. They literally, as a bank, you'll get as the chief executive, you'll get executed. I mean, they executed one of the guys like a year ago from a debt recovery business. He got a bit too bullish and he lost some money. I mean, they literally state execution. So anyway, you have got a quota. Here we go. An annual state-imposed lending quota, right? And the banks are going, boom, filled. And what have they done? They've taken all of that money and they have bought up low-risk financial instruments rather than issue loans to the real economy. And they're like, we would rather lose a tiny amount. You have, Mr. Bureaucrat, you may be mighty, but you ain't seen what we've seen. All right, the system's going down, baby. And I'd rather lose a tiny amount of money taking no risk than a ton of money taking the risk that you're asking. So
it's going to be interesting to see how it all pans out into it. It's going to be see who's right, who's wrong. Right, okay. And finally, people, we're interested in a new thing this week. Hugh Henry's, or the acid capitalist as he's known, Wheel of Tombola. Number 1 to 59, I have 59 random topics. Hugh picks one out of a number. He doesn't know what it's going to be. And he tells us a hedge fund story involving that thing. So Hugh, I can see you're excited about this. So number 1 to 59, pick a number, please.
19.
19, right. 19 is, do you have a hedge fund story involving a kilt? Scottish national dress. So you must have a slam dunk on that.
Don't believe I do.
Never once in your hedge fund career have you worn a kilt, seen a kilt, been involved with a kilt?
Well, I have. I'm not a great one for the whole Scottish thing. I did, however, get married wearing such thing, and I went for the Prince Charles. Very sober. That the hunting, the thing that you see Scottish people, Scottish guys wearing is Disney. It was invented by Sir Walter. Was it invented by Sir Walter Scott for the visit of the Queen to Edinburgh on some jamboree? He's like, hey, look, dress up like this, you idiots. They're like, oh, hey, you know. What's that Hollywood movie which is set in a fictional Scottish from the 50s? Whatever. Anyway, it's all bollocks. But the hunting kilt actually is rooted. People did wear it. The common folk did wear it, and it's nice. And you wear a nice sober green. Do you know? I wore that. I didn't wear the kilt, but I wore the kilt jacket, which is very kind of, again, we're off hunting, lads. There's a deer. Boom. And I wore that as I was guest hosting on CNBC Squawk Box. I'm sitting there like Bonnie Prince Charlie talking about. So yeah, there you go. There's my hedge fund story with the kilt in a financial context. And in fact, I believe that if you do a Google search, or I should actually say a DuckDuckGo, I do not use Google. If you use a DuckDuckGo search, I'm sure you'll find an image of me wearing a green plaid kilt jacket on CNBC.
So a hedge fund manager inspired by Prince Charles. That's quite interesting. I like that. Prince Charles's fashion. Quite like that.
Inspired by his fashion choice to go fly fishing, as opposed to being inspired by anything else within his orbit.
Brilliant. Well, Thank you, people. That has been episode 21 of Confessions, a hedge fund inside the hedge fund mind of Hugh Hendry. We're off to a great start for the year 2022, year of the apex predator, the tiger, and we're here. We're back. We'll see you next week. Take care. Goodbye, and over to Hugh to sign us out.
I've said enough. Goodbye.
Great. Done.